Imagine a single, sleek background visual stretching across the entire video, a darkened smartphone screen displaying the Chime logo in vivid neon green, overlaid with faint, shimmering outlines of stock charts climbing upward. Behind this, the silhouette of a modern city skyline at dusk hints at the financial world watching every move. Against this one static image, let's dive into Chime's much-anticipated IPO and the fierce valuation race surrounding it. Chime, the digital banking startup that redefined the way millions manage money, is on the brink of its first public offering. Founded in 2013, Chime built its reputation by offering no-fee checking accounts, early direct deposit, and automatic savings features that traditional banks simply couldn't match. By eschewing brick-and-mortar branches and prioritizing a mobile-only experience, Chime attracted a loyal base of younger customers who crave convenience and transparency. Now, with rumors swirling that Chime's IPO could value the company at anywhere between $30 to $50 billion, investors are scrambling to understand what makes this fintech unicorn so special and whether that lofty price tag is justified. In its most recent private funding round, Chime raised billions of dollars from venture capital firms, and its valuation soared past $25 billion. Backers point to Chime's explosive growth. In 2024 alone, the company reportedly added more than 5 million new accounts, pushing its total user base to over 20 million. The revenues, driven by interchange fees on debit card transactions and other embedded finance services, have also skyrocketed. Some analysts estimate that Chime could bring in nearly $1 billion in revenue by the end of this year, with operating margins improving as it scales. But skeptics argue that Chime's path to profitability remains uncertain. Customer acquisition costs are high in an already crowded digital banking market, with competitors like Vero, Current, and traditional neobanks launching similar fee-free features. Moreover, recent consumer data suggests that churn rates for mobile-only banks can climb quickly if users encounter even a single disruptive service outage or app glitch. For Chime, maintaining its growth trajectory while expanding into new products, such as lending services, joint accounts, and crypto integrations, will be critical to satisfying investors who expect rapid returns once the IPO is live. As chatter about Chime's valuation race intensifies, whispers within Wall Street highlight a showdown among major investment banks vying for prime placement in the deal. Earning the role of lead underwriter could earn a bank tens of millions in fees, so firms like Goldman Sachs, JP Morgan, and Morgan Stanley are reportedly battling behind closed doors to secure top billing. Meanwhile, hedge funds and mutual funds are lining up to reserve blocks of Chime shares, hoping to ride the initial pop that often accompanies high-profile fintech debuts. Heading into the IPO, dates remain fluid. Insiders suggest that Chime could file its S-1 registration as early as next month, with a roadshow scheduled shortly afterward. If all goes according to plan, shares might begin trading on a major U.S. exchange before the end of the quarter. That timeline places Chime among the most eagerly awaited listings of 2025, right alongside other digital disruptors seeking to capitalize on robust market appetite for technology stocks. Yet the question on everyone's mind is whether Chime's valuation expectations are realistic. A peak valuation of $50 billion would place Chime in the same league as some public banks that generate multi-billion-dollar revenues and operate with international branches. For a startup that still has a relatively narrow product suite, there's a risk that investors might pay a premium on hype rather than fundamentals. On the other hand, if Chime can demonstrate sustained net new deposits, profitable lending partnerships, and successful cross-selling of third-party services, it could justify even the most optimistic price targets. When the IPO finally hits the market, all eyes will be on the aftermarket performance. Will Chime shares surge past opening levels, rewarding early investors, or will they settle back as other fintechs have in recent months after post-IPO lockup periods expire? If Chime defies expectations and maintains momentum, it could pave a way for a new wave of digital banking ventures to pursue public listings. Conversely, a lackluster debut might cool investor enthusiasm, sending ripples through the entire fintech ecosystem. As you watch this single static image, Chime's glowing logo and the upward-sloping charts, it encapsulates more than just a brand on the verge of going public. It represents a broader shift in finance, a generation that expects seamless mobile experiences, zero fees, and instant access to every aspect of their money. Chime's IPO is not merely about one company's valuation. It symbolizes whether mobile-first banking will continue its reign or hit a ceiling when faced with profitability pressures and fierce competition. So stay tuned. When Chime's IPO finally launches, we'll be here to dissect every number, every share movement, and every strategic decision it makes in the aftermath. Until then, keep your eyes fixed on this single visual, and remember, in the fast-moving world of fintech, today's billion-dollar startups can become tomorrow's household names or cautionary tales.